Right, let's get to the part of the show I've been waiting for, a drill down on the GST. 200 days almost, and just 7 days away from the budget 2016. So joining me now in the studio is SENTHURAN ELALINGAM, Deloitte Malaysia's GST Director, and Poon Yew Hoe, Managing Partner at Crowe, Horwath, and a Council Member at the Malaysian Institute of Certified Public Accountants, MICPA. Gentlemen, thank you so much for joining us. Let's start with this, and Sen, we start with you. Give us your overview of what has transpired over the last 199 days, to be exact.
Well, essentially, I think we've gone into a transformation, so we've introduced a new tax. Things are starting to get easier, things are starting to get normalized, but there's still a lot of challenges. This is what we've learned from other countries. I'm Australian, we've had the same issue in Australia. Once the GST was introduced, it takes a little while to get settled down. So, people are still figuring out how this works. Advisors, businesses, even customs to some extent is still trying to figure out some of the nuances of the.
All right, and perhaps we'll get into some more comparing, contrasting later on in the show. How about you, Mr. Poon? Everything according to expectations?
I think the implementation has gone on pretty well. It's like 6 or 1 months now from what we hear from customs. They have about 300,000 taxpayers who have registered, now of which only about 20,000 have not submitted their returns, and that is a very good submission rate. So I think they have done extremely well, And the collections also have been extremely good, definitely exceeding the projected figure of 23 billion, from what we see. From what I understand is that they've been getting about 30 billion, so that's very good. And of course, there are some hiccups here and there, but we are still in the early days of GST implementation. So perhaps we will see some improvements in the days ahead.
Now, Poon has just used the phrase "very good" twice, but then I believe you're about to highlight some challenges that still need to be ironed out here.
Again, because this is quite new, so there's still areas of the law that are unclear for businesses, and businesses are still trying to work out how this works.
For example,
so in some areas that are still very unclear. So say for the property industry, they've had to go through a number of consultations with customs to try and clarify issues, and that's still ongoing on some certain technical points. It's sometimes to do with the treatment of, say, items that are sold with the property, say, free items. When you buy an apartment, you may get certain things with it. Is that subject to GST? Is that not? So some of these areas are still, being worked out. And so this is, again, what's expected when you're introducing a new tax.
Right. Now, at the same time, when the GST was implemented back in April, we immediately saw a direct feed-through into inflation, the CPI. But over the last few months or so, it has kind of tapered off. So what are your expectations there? Has the effects of the GST been fully priced in?
I would say definitely it has, but what we are seeing is that I think the price increases in the market, I don't think it's just primarily because of GST. GST has definitely an effect. Because of the 6%, some businesses may have priced it higher than 6% to take advantage of all the pent-up costs and all that. But I think the increase in prices now could be possibly due to our currency depreciation. And also a lot of the costs previously, that have not been priced into the goods, they have been surfacing now, such as say minimum wages and all that. Yeah, so that's what we are seeing at the moment. But I think by and large, things have more or less stabilized. I think once the currency differences have been priced in, I think it will settle down to a more steady price level.
Now, we also understand that, for example, prices at the pump, RON95, that has also had a big impact here. So I guess, given the timing of the GST, couldn't have been better, given the fall in commodity prices.
I think RON95 prices are linked to the world oil prices. Yeah. They have got, GST has got no effect on RON95 because it's GST free anyway.
Right, for now. Yeah, but now do you see, because look, right now we do have a long list of zero-rated items, items that are exempted from the GST. Do you see that list shrinking in the near term?
Well, I think ideally what we should have is consistency. So I think at this stage, in terms of changes to the law, we're not expecting significant changes because, again, you want businesses to get used to it. At the same time, again, I think the government acknowledges, there are certain parts of the community that are feeling, the challenges, and again, there may be certain goods and items that we do see added. One of the areas that we do expect is probably an increase in some of the pharmaceuticals that do get zero rating, again, to sort of reduce the price of those goods as well.
And now, speaking about change and continuing with this trend here, there have been some rhetoric saying that 6% might have been a bit too high. Like earlier on this show, we just heard from Jalila Baba, a pre-recorded segment, saying that it should have been at 3%. What do you think? 6% an okay number?
Well, I mean, again, there's a lot of other factors at play, but I mean, if you compare what 6% in Malaysia is, it's one of the lowest in the world, and it's definitely the lowest in ASEAN. If you look at our neighbors, Thailand and Indonesia, they have rates of 10%. Singapore's got a rate higher than 6%. So in that sense, 6% is not that high. And relative to the number of zero rating and exempt items we have, which Singapore has a much broader, it taxes a lot more things. So relatively speaking, I think at 6%, the effective rate is much lower.
Okay, and what about you, Poon? Do you see a timeline whereby the GST could be increased?
I think if we look at the overall revenue sources of Malaysia, definitely we are seeing quite a significant drop in the direct tax revenue because of the low commodity prices. So the collection from oil companies, even palm oil companies, would drop. And we are actually seeing a drop of close to about 15 billion from the projected figure. So really, in terms of comparison with last year, I don't think there's much of an increase in direct tax. So really, it is GST that's saving us, or at least saving the government, all right? Because GST is projected to be about 30 billion. And when we look at the previous sales and service tax, it was only like about 15, 16 million. So they haven't increased about 14. I think in days to come, GST is going to be one of the fundamental pillars, of our government's revenue sources. So do I see that the rate is too low? Frankly, I think that the rate is reasonable because if it's too low, we will not collect enough. If it's too high a rate, we will see huge inflation. We will see a lot of evasion and tax avoidance and things like that. But from my experience in the market, it doesn't look like that.
Right, but we have been seeing some level of evasion. So in your estimation, how well has customs been able to mitigate that?
I think they've been doing quite a lot, and I can say that in the months ahead, there will be a good amount of GST audits to be done. All those people who have been manipulating their numbers or evading or not paying up, those will be under the spotlight. But I think those who do honest mistakes, I think you may be spared. And I think customs has said that they will be lenient. So let's just see how it goes. Yeah.
So going back to the point that Poon highlighted, being that GST is one of the pillars for government revenue. And at the same time, we do find ourselves within this fiscal consolidation period. In your assessment, how important is it to fiscal consolidation?
I think it's a very important factor. I mean, basically what we're seeing globally is a growing trend towards indirect taxes, is an increasing in indirect taxes and lowering things like corporate income tax and personal income tax, because it encourages people to, I guess, work more, generate more income, because what we're doing is taxing consumption. So in that sense, it's a positive thing, and we've seen that positive effect in the sense of Malaysia was heavily reliant on oil revenues, and we've seen it this year where that oil price has dropped and significantly impacted the economy. The fact is, by having the GST, it's allowed to have another revenue source. So I think that's a very important factor.
All right. Well, excellent points there. Thank you so much, gentlemen, for your time and spending your time here at Bloomberg TV Malaysia. Hope to see you again, maybe when 300 days rolls around. We'll see. And that was SENTHURAN ELALINGAM, Deloitte Malaysia's GST Director, as well as Poon Yew Hoe, Managing Partner of Crowe, Horwath, and a Council Member at the Malaysian Institute of Certified Public Accountants.